In case you missed it, we had some ethanol production numbers that came out earlier today, and let's review for you and see how the production fared last week. Okay, on the U.S. platform, the entire U.S. for ethanol production last week, here's a look. The daily production averaged out to be 987,000 barrels per day. The prior week, we had 993,000. So really, it didn't even decline very much, just 6,000 barrels per day. The 4-week average now stands at 996,000. And the ethanol stocks have moved back up above 23 million at 23.3 million barrels. No imports this past week once again. Let's go to the trading floor in Chicago, find out what's going on in the grain trade first with none other than the one, the only, the Mr. Todd Bubba. Call him Bubba Horwitz of BubbaTrading.com. All right, Todd, let's take a look at this grain market. This thing has been just chopping around all over the place. You better get whiplash trying to follow this corn market today.
Turn your head for a minute and it changes. I mean, wow, I can't believe what's going on there. It's been pretty wild, actually. You know, it looked like we were all set to make a nice little rally in corn and wheat, and of course, next year turn around and corn is now down. Last I looked, about 4.5 cents, and wheat is down. Soybeans are down about 8. I mean, it's been, you know, soybeans were kind of weak all day. They made one little run this morning, got up a couple of cents, but basically, very shocking development here overall. Now, again, I think a lot of it has to do with probably options expiration, which is this week. So I think you might be seeing a little bit of some manipulating of some positions, trying to roll some things around. And I would put more of the blame on the options expiration than I would on anything else.
We've been talking a lot about it today, about the end of the month coming up in a couple of days. And a lot of traders talk about the fact that the big funds and a lot of larger traders like to put what they call window dressing on their books before they wrap them up for the month.
That is typical. I think it's much more typical in the equity space. But yeah, but again, when you have an options expiration and you're rolling over into now a new month, again, that's when you get a lot of people trying to roll out of positions, and it can at many times create a weird type of trade, which I think is what we're kind of seeing right now, because we don't typically see this type of whipsaw back and forth in these markets, especially at this time of year, especially with no real news on the horizon.
Okay, let's take a look at our current trade. Let's go to corn first. And as you mentioned, down sharply right now. May corn down 6.5 now at 358.5. Another new low for the day. We have December down 5.5, 383.5 for the last trade, and that's on the low of the day. Soybean trade. Here we go. The May contract now currently 9 3/4 lower at 944 3/4. And November down 9 1/4 at 952.5, only 2 ticks from its low of the day. Wheat market, the wheat market had been on solid footing earlier in the day, but that's kind of given way in Chicago wheat. We have May down 2.5 at 406 1/4, and July, the new crop month, down 2 now at 425, just 2 ticks from its low of the day. We're off our high by 7.5 cents now. On the Kansas City market, we have the May contract down 2.5 at 409.5. And July down 2 at 422 3/4. That's a penny and a half from our low of the day. We're off our high here by 8 cents. And looking at the Minneapolis trade on the spring wheat market, we have the May 2 3/4 higher, one of the few bright spots here on the wheat complex. July now 5 higher at 549.5. And on the cotton market, we'll wrap this segment up. On the cotton, we have July down 28 points at 79.08. That is after posting a high earlier today of 79.74. So this thing's been chopping around too. December new crop cotton currently down 7 at 74.93. Todd, I'll bring you back in a moment, and we'll talk about an equally choppy livestock market when we come back right after this. We're in the middle of a very interesting discussion with Todd Bubba Horwitz of BubbaTrading.com in Chicago. Grain market's very choppy today, and on the livestock side, it's kind of hard to read the tea leaves here, too. Now, the cattle market on Monday, it looked, after the cattle on feed report last Friday, it looked like the cattle market may be in trouble. It sold off hard on Monday. Then it came back late in the day yesterday, and look at it today. We have June live cattle up $1.90 at 117.72 per hundredweight. That's a dime off our high of the day. What do you make of that turnaround we've seen here?
Well, let's put it this way. The first thing is Monday's sell-off should have been bigger, which was a sure sign that maybe they were going to take a stab at the rally. Now we're back to where we were. In my eyes, this squeeze is going to be over between April and June in the next day or so, right? April comes off the board.
Right.
Let's see what happens then. I say they're going lower. Now, again, I wouldn't short them right here because it's too hard and the markets are too much going up. But I'm telling you, I will be looking for a spot because after this squeeze is over, which is I think what we see right now, once April's gone, I think June goes down 6 to 10%, and then we'll see what happens from there. Now, overall, long term, I want to be a buyer, but I'm looking for that pullback. This rally has been too straight up, cannot be sustained over a long time unless there's some weird news out there that we don't know about yet.
Todd, you and I were talking earlier in the day about this spread, as you mentioned, between the April and the June contract. Let's take a look at that on the live cattle board right now. When we came into work, it was about $14. It's still like that right now. April 131.72, June 117.78. When the April drops off on Friday, that's going to be leaving a huge disparity between the June and the cash market, kind of similar to what we saw earlier in the year when we had a big disparity. But sooner or later, that'll have to catch up with itself. One will have to give between that and the cash market, right?
And I think the cash market's going to give. I think that's what's really telling you. We saw this exact same formation in the hog market, April. Now we're seeing it April, June, and cattle. Again, I'm looking for lower prices. I don't think this market can be sustained. If it were an equity market, I'd call it a bubble, but it's not because it's actually food that we have to eat. So I do think we see lower prices. Longer term, I'm really looking for a spot to buy them, and I'd like to buy them about 6-7% lower than where they are now. And I think that would be the right spot to step in because I think we'll see much higher prices later in the year.
So you're looking at it from the trader standpoint there. I want to look at the feeder cattle market right now, and they're showing strong gains, even stronger than the live cattle side. May up 297 at 140.65, a dime from the high of the day. August up 337 for the biggest gain on the day. We're at 144.72, 15 cents off our high of the day, and we're off of our low, believe it or not, $3 and almost 20 cents off of our earlier low today. Now on the lean hogs, that's the reverse of that, where we started out higher, about a half $1 or so on average, and now we have June lean hogs down $1.15 at 70.68. It's a new low for the day, and July on a new low for the day at 71.60. That's down $1.25. So what's your strategy here, Todd? Are you selling cattle and buying hogs? What are you doing today?
I'm on a new low for today too. I'm going to the barbecue. I'm getting the hogs and I'm selling the cattle. I think that's the right play right here. I think hog 70 is a great level to hold. I think cattle is well overpriced. I think feeders, not surprising that they're a little bit higher than everything else because they have not participated with the fat cattle over the last couple of weeks. If you notice, feeders were more solid flat and fats were going straight up. Now I think they start to even out, and now I think you look for opportunities to benefit from the downside in the short term here.
All right, Todd, don't go anywhere. I want to just stay right there. In a few hours from now, I'm going to talk with you about what's going on in the markets on our evening news. So
I won't move.
Yeah, just stay right there, and I'll be with you in a few hours. Todd Bubba Horwitz at BubbaTrading.com. Interesting market concept.
Yeah, absolutely, yeah. I wish he had a little bit more emotion.
Yeah, I wish he'd get involved in the markets. Yeah.
Good to always hear from Todd. Thanks.